Mr. Governor, thank you for a very thoughtful and I think a very important set of analyses and proposals for global economic governance. You came to the right place. We certainly work on that a great deal here, and you've given us, I must say, a lot of additional food for thought. You've also, by the way, emphasized rightly that Norway consistently punches above its weight, not only in the Olympics, but in contributing to the international financial and economic system, and we're well to be reminded of that by you. So you've laid out a lot of very thoughtful and provocative ideas. I've got a few responses myself, but let me first open to the audience and get comments. Let me ask each of you to introduce yourself and then fire away, either go to the standing mic in the back or go to the traveling mics that would be brought around. Ono.
Thank you. I would certainly agree that Norway...
Identify.
Oh, yes, sorry. I'm Onno Wijnolds, formerly IMF and representative of the European Central Bank here in Washington. I would certainly agree that Norway punches above its weight in a number of areas. However, I would like to ask you, Mr. Governor, whether you can elucidate a little bit the reasons for Norway not being a member of the European Union. We were talking about multilateralism and so on. And I think Norway would be a great member also of the Eurozone. You could seamlessly fit into the framework. And I see also an advantage for you personally that you could become a member of the Council of the ECB and make your voice known there. And following that up, I would wonder if you could give us a comment on what the chief economist of the IMF said recently, that it might be a good idea for central banks to raise their inflation targets a little bit. You have an inflation target regime. Would you contemplate moving it up to, say, 4%? Finally, a question about one of your, I would say, neighbor countries, Iceland. It's been talked about a lot recently. I understand that Norway has been supporting Iceland in some ways, but perhaps you could give us a little more detail of this very delicate matter. Thank you.
Okay, thank you. I think the political establishment in Norway has been, in the political establishment there has been an overweight of yes to EU membership. But the issue has been put to the people twice, in 1994 and back in 1972. And both times there was a majority of no votes, some 2 or 3 points, more no's than yes. So people have not jumped to the idea of Norway becoming a EU member. I think it has something to do with the fact that we are quite a young nation. We had a union with Sweden up to 1905, and I think many people think that we should stay outside any union for some time yet. It may also have something to do with the kind of economic situation that Norway have been in over the last 20 and 30 years. The issue of inflation targeting, Norway had, as many other countries, huge problem with high inflation in the 70s and 80s due to mistakes in economic policies. And we had to go through a period of very strict economic policies in the late 80s and early 90s to get inflation down to a lower level. So that was a very hard job to get done, and it cost a lot in real terms. Since the early 90s, we have had an inflation approximately at our target of 2.5%. I think it is the right thing to do to raise questions about inflation targeting, of course, and the way monetary works, given what we have seen happening in the world economy. I would say, nevertheless, that we must not throw out the gains from that earlier period. It is the problem of politics in increasing these targets should not be underestimated, I think. If we go to 4%, why not 6%? And if we go to 6%, why not 8%? So I think it has been a hard job establishing a low and stable inflation, and that we should stick to that. I will also mention what one might be afraid of is the fact that it is when inflation actually goes down to 0%, it is difficult to, in a downturn, have established negative interest rates. We have seen experiments around the world, for example in Sweden, in our neighboring countries, where central banks actually set negative interest rates. So maybe one should look more into that possibility as a contrast to increasing the inflation target itself. Our neighboring countries, Iceland, have huge short-term problems. But Iceland is a rich country from the nature. Icelandic people, they work very hard. Both men and women in a family work, and they work until they are 70. And in the summer, the men in the families have 2 jobs. They also work in the tourism industry. So don't be too afraid about Iceland. They will manage. It might take some time, but that kind of hard-working people, with the kind of resources they have, the education system they have, they will prevail over the longer term. They have some short-term problems, financial, and IMF have helped them a lot. And the other Nordic countries have also contributed along with IMF and the IMF programs. They have some disputes with some European neighboring countries, and those disputes should be solved so that the Icelandic economy can move on.
Okay. Yeah.
I am obliged almost.
Go to the mic. Go to the mic. Right. Go to the microphone.
Oh, whoa.
Go to the microphone, please.
So, I'm Hjálmar Hannesson, Ambassador of Iceland in Washington. Thank you very much for your very kind words about hardworking Icelanders.
You have 2 jobs in the summer.
My wife is a part-time guide, for example. But her full-time job is to be my wife and represent Iceland. But in all seriousness, you touched upon, of course, our short-term difficulties. And in that connection, the twist between Iceland, the Netherlands, and the UK on the so-called ICE-SAVE accounts. And I would just like to ask your, the Norwegian opinion on why the IMF and Iceland program has been delayed repeatedly because of this twist between 3 founding members of the IMF. That's a delicate question. I'm sure you can appreciate that we are very much waiting for the accelerated program to set in. Thank you very much again for your very kind words.
Iceland have got a new proposal from England and from the Netherlands, and I think a very valuable contribution from those 2 countries. And I hope that it would be possible for Iceland and England and the Netherlands to agree based on that proposal. I think it is very important for the IMF to go on, to know more about what kind of obligations Iceland will have in the future. They have to go through all your debt and the way you and plan for you repaying it. And then I think it is important for the IMF to have a solution on the table on that very difficult issue.
Since the topic of small, financially troubled countries on the periphery of Europe has come up. What's your take on Greece?
Well, there are many problems in some of the member countries of the EU, of course. You have the problem in Greece with a huge deficit combined with a large fiscal debt. And that is one huge problem. And then you have the second problem is that over the last 5-10 years, the competitive situation of the business sector of Greece has deteriorated a lot. They have a kind of, if you look at their real value of their currency, so to say, the cost level, it has increased by 20-30% as relative to the countries that they trade with. So when you have a situation with a high cost level, very high cost level, and fiscal deficit and fiscal debt, the combination means that it is very difficult for the country to grow out of the problem. So it is only one thing that matters in Greece, if I understand the figures right, and that is hard fiscal measures. And of course that is difficult to achieve. They have had a long period of quite strong growth, strong increase in spending. And the first people that start striking is the officials in the Ministry of Finance and the tax collection people. So of course they are in a difficult situation. I think that it is possible for EU to come up with some help. The Lisbon the Lisbon Agreement opened up for that in special cases. So that is a possibility for them. On the other hand, the EU institutions are not very much trained on dealing with individual countries that run into these kind of problems. They have asked the IMF for technical assistance, and I strongly believe that that is necessary, and time will show if they also need more help than only technical assistance.
Joe, and then Barbara, and
Thank you. Joe Gagnon with the Peterson Institute. You mentioned the issue of global imbalances and how they are a risk going forward that needs to be addressed. You talked about mercantilist policies, I think that's the word you used, of countries holding their exchange rates down. Of course, the way they do that is by buying lots of foreign assets. But you also mentioned that Norway has lots of foreign assets, and maybe in per capita terms a lot more than China, perhaps more than anyone else. So how do you see sort of a resolution to this problem? What is Norway, how does Norway fit in to this? And I understand that a lot of these assets are part of the pension plan for the future pension needs in Norway, but a lot of countries have need to save a lot for future pension issues, so pension needs. So how do we equitably deal with that?
Okay, if you look at our oil history, we found oil in the late 60s, and then it took us one generation to really start saving from the income. And that period of savings, building up fund, may last for one generation, something like that. It took us one generation to invest in the oil sector. We have a economic rent from that activity, and we save that economic rent for a generation. And from then on, we will be able to spend the real return, and only the real return from the fund. And the hope is that this fund may last for many generations. Our situation is very much different from those countries you mentioned, of course. Our absorption, ability to absorb income is limited. We are a very small country. So the alternative for us would really have been not to spend more domestically, because we cannot do that on a lasting basis. The alternative for us would have been to reduce our oil production. And of course that would have a negative impact also on imbalances in the world economy. So for us, this is the only alternative. And the international capital market have, from our point of view, in gross words, functioned very well.
But maybe just to pursue the point, I mean, another alternative, which you obviously didn't choose or don't like, would have been to let your currency appreciate more, which would also be a way of enhancing national wealth and income. Why did you reject that alternative?
Well, we have learned a lot of the history of the Netherlands in the 60s. We have learned a lot from reading history of Spain in the 16th and 1700s. If you spend a lot on a non-renewable income source in a short period of time, you will eventually run into big problems. You have the Dutch disease from the 60s as an example of that. And it is very important for a country like us to have more legs to stand on than only the oil sector and a big public sector. So that is also behind the policy.
Yes, thank you.
Barbara, go ahead.
Yes. Hi, I'm Barbara Matthews with BCM International Regulatory Analytics. As a lawyer, I am, of course, predisposed to liking the concept that a statutory basis is necessary for legitimacy. And in fact, I'm publishing some research soon that concludes that the IMF is all roads lead to the IMF. But I want to ask a question about, to press the point about whether this is a necessary but not sufficient condition for effectiveness. Because whether you look at the IMF's work on global imbalances before the crisis or whether you look at the European structure now, in both cases you've got plenty of agreement on this relevant treaty and statute basis. But you don't have a lot of enforcement ability. You don't have a lot of follow-through, the ability to sanction, the ability to effectuate policies that have an impact consistent with the normative decisions taken under the statutes. So I'm wondering, what lessons do you draw from how Brussels is reacting to the Greek situation that might be relevant to the G20 and the IMF?
The EU have established a way of following up individual countries. And of course, I think, given the experience from that they have to look once more on the effectiveness of the process that they use, the kind of means they have in Brussels and in the European Council is not that very strong. They have a target of keeping debt level at 60% of GDP and deficits below 3% of GDP. And of course now the deficits are some 7, 8, 9% of GDP, and the debt level are approaching 100% and will probably go beyond that in many countries, far beyond in many countries. So in one sense they have to strengthen the way they follow up individual countries. And that also would be very important in that respect.
Let me ask a broader question, if I might, about your central thesis. I mean, you made quite a cogent critique, I think, of the G20 as the self-appointed premier steering mechanism, but you did recognize that there has to be some smaller group, that the world as a whole is not an efficient decision-making machinery, so you have to have something smaller, and you opt for an enhanced IMFC, which is certainly a creative idea and a reasonable one. Those of us who have supported the G20 have done so partly on the grounds that it was a lot better than the G7 because it was more representative, didn't go as far as you want, but it was a lot more representative, so it was an important step forward. But also for two other reasons that I'm not sure your enhanced IMFC would address. So let me ask you about those. One reason is the need to bring together the whole range of important global economic issues, obviously including the IMF and macro issues that are the focus of the IMFC, but also trade policy issues, climate change, and other environmental issues, just to take the two most prominent. So question one for you, do you believe an enhanced IMFC, as you proposed it, would be able to broaden its mandate and competence to deal with the whole range of issues, if you accept the premise that it's important for the leadership structure to address those together? Then the second question is the level of representation. The G20 and the G7 before it tried to function at the head of state level through annual summits, in the G20 case more than annual summits, both last year and this year. Would your IMFC proposal envisage a leap to include summits of the rotating, perhaps, membership of the IMFC, so as to bring, again, what's premised, the necessary highest level of political responsibility to the process of global economic governance? Would your proposal deal with those two issues, or could it be tailored to deal with those two components of the global coordination problem?
I think that's a very important question you raised there. I think my point is that not necessarily all countries should be represented. The important thing is that there is someone representing all countries at the table. And that is the important point from a democratic point of view. When it comes to efficiency and level of representation, I think that the strengthened role for the IMFC, of course, and in the IMFC it would be the finance ministers of the world and the central bank governors in the bigger countries. I think that could be combined with also meetings at head of states. And I also think that on a more broad terms, trade policies, other important economic issues also may be discussed in that forum. But of course, then you have other organizations to follow up the principles that the politicians decide in those more broader meetings. And you need those as well, of course, to manage to get the policy through.
But just to press that point, would the WTO, for example, feel that it was legitimate for an IMF-centered institution to give it its marching orders, as compared with a head of government operation like the G20, which, yes, is self-appointed, but also does clearly have, embodied in its heads of government that come, responsibility for WTO matters, climate change matters, as well as IMF and financial matters?
I think so. I think it is possible for the IMFC or the finance minister to discuss that issue. But of course, it also must be backed up by the heads of states, as you mentioned.
Okay. Yes, in the back. Oh, I'm sorry, Ernie was next, and then in the back.
Thank you. Ernie Prieg, Manufacturers Alliance. Governor, I'm delighted to be here today for one reason, because I'm 50% ethnically Norwegian, from my mother and grandparents from Mandal, Norway. And a few years ago, I helped celebrate the centenary of Norwegian independence from the colonial Swedish power. But my question is a follow-on to the question from Joe in the back, in a little broader sense. You made a strong case that the IMF should be a rules-based international financial system to be strengthened. And yet, there are no rules for exchange rate policy, which may be the most important area of policy rules, certainly today. You mentioned about abuses of competitive devaluation. There is the Article 4, currency manipulation and strictures on protracted large-scale purchases. And yet, the IMF ministers and the G20, they just never talk about rules for exchange rate policy. So my question is, isn't it about time? Shouldn't they take this on now and try to develop some reasonable rules for exchange rate policy?
I think it is important that IMF raised that issue. I'm not quite sure if it is possible to establish rules for exchange rate mechanism. I think it has to be based on free movement of capital, flexible exchange rates among the bigger countries at least over time. I think what the IMF bring to the table is analysis of the kind of misalignment that you might have through the exchange rate, rate and that market, and they have done that. But of course, there has to be also a political will to discuss these issues and take actions. You mentioned some Asian countries. I think what we have seen and experienced, of course, is that it is necessary for emerging countries in Asia to base more of their growth on domestic consumption and domestic demand, and that they cannot rely on only on a very strong export base. What we have seen with China, for example, is that through the Asian crisis, they didn't depreciate or devalue their country. They kept a quite strong currency through the Asian crisis. And then when the situation built up through 2006, 7, and 8, they actually devalued their currency towards US dollar and other countries by some 15-20% over not a very long period. And then came the crisis. They stabilized their exchange rate. But maybe now it is soon time for them again to look into their policies in that respect. I think it is difficult for emerging countries to totally open up when it come to capital movements, and they have to have some kind of policy for stabilizing developments in that market. But they have shown earlier that they are able to change policies over time, as they did in the period, I think, from 2006 and up to 2008.
Just for the record, and to quibble a little bit with Ernie, hopefully for the edification of the audience, I think, Ernie, it's wrong to say there are no rules. You quoted them yourself. The articles in the IMF, and as you know, more loosely, one of the articles even of the WTO, does proscribe competitive undervaluation. So there's a rule, and they're even implementing guidelines, which you also quoted. The question is the enforcement. It's not the existence of rules, it's the... Well, but it's the failure to enforce, starting with, of course, talk about it. Now, there's a lot of talk. The managing director of the IMF says once a week the RMB is substantially undervalued, but the membership doesn't do anything about it, and that's the problem.
Surpluses should not central banks should not be purchasing when you have a sustained surplus unless you face a threat of Dutch disease.
Well, you're going to catch Norway, I was going to say.
No. And China does not face the Dutch disease.
Chinese will suddenly invent a new defense for their intervention policy. They want to avoid the Dutch disease in China. Yes, ma'am.
Thank you. I'm Yasemin Biro from the UN Foundation. I wanted to go back to the issue of the pension funds and the Norwegian Sovereign Wealth Fund. Given the climate concerns globally and the call for transition to a low-carbon economy globally, what is Norwegian thinking about rediverting or maybe rethinking some of these investment strategies, long-term investment strategies for these funds, and rediverting to low-carbon investments with a longer-term perspective?
I think the position is that we don't think that the fund itself is a very strong instrument in that respect. We think it is important that tax policies, indirect taxes, trade in quotas could be established on a world basis so that the cost of carbon is better reflected in prices. And then if we invest in the companies with the best earning potential and the tax system is in order, then there is no conflict between our policy and the fight against the climate problems. So we think the starting point is indirect taxes, regulations, policies on quotas, trades in quotas, and that kind of issues, more than directing large investments per se in that direction.
But again, to follow up, the pension fund has, however, pursued some social objectives in its investment policy, right? In fact, we had your colleagues from the fund here a year or so ago with very interesting discussion of that. How do those decisions get made? How is it decided what social objectives should be pursued by the investments of the fund and which should not, perhaps like climate change?
Okay, there are two different levels of decisions. You have it on the government level. The government have, for example, decided that they would not like to own tobacco companies or companies that produce some kind of weapon. So they have that kind of instrument. On the central bank level, on our level, we have established some areas where we put a lot of emphasis on. For example, labor work in the world. So that is an issue, a soft issue, that we have worked a lot with, and we work with the companies, with the chair in the companies, and to get them to cooperate, it's concerned the big multinational companies, and to help them cooperate better on that kind of issue. So that is on
labor standards?
That is on labor standards for children labor, as an example. So that's the way we work on that.
Follow up on that, Howard?
I have a follow-up question on that. I'm Howard Rosen here at the Institute. I imagine that you've done some work on the return to that socially conscious investment strategy. Has anyone ever done any work looking at what your return would have been if you followed the portfolio strategy, let's say, of the United States or some other country? And how do you defend to the Norwegians that you might be getting a return that's less than you could be getting?
It is easy to measure that when it comes to tobacco companies and these companies that produce weapons, because we can directly compare the return. So that is possible. I wouldn't say that have a huge impact on the overall return. I think we have a universe of 8,000 companies that we are invested in worldwide. And the number of companies that we cannot invest in based on government decisions is some 40, 50. So it's only a very small part of the universe. So that doesn't mean that very much to the overall return. When it comes to engaging in social issues with the companies, we think actually that in the longer term, that will help return from these companies. You have in some situations that there are 2 or 3 or 4 companies working, for example, in India, producing something and using children as labor. And if they operate one company and look into what kind of rules they follow, they know if they move alone, they will lose something when it comes to competition with other companies. What we try to do is to bring companies together and discuss some common standards on that kind of issues. And I think over the longer term, that also benefit the return from the fund.
Just out of curiosity, do you do that purely on your own? I mean, you're a very big investor, so you have a lot of clout on that on your own. but do you ever try to get other sovereign wealth funds or other big investors to cooperate with you in those efforts, which would make them even more potent?
Yes, we do that. We cooperate or discuss policies with other pension funds. But I would mention there that my impression is that there are too many meetings and too little done on the actual towards the actual companies. There's a lot of writing of nice principles, but too few that actually work with the companies. So we try to specialize on that.
Can I just follow up on that second part of the question, which is, do the Norwegian people understand that they may be sacrificing some wealth in order to meet those social objectives? And is there some kind of response to that? Do they? I mean, the government is doing this, but do you have the backing of the people?
I think there is. It is necessary for a fund of this type to have a policy on these issues, and I don't think the Norwegian people would accept a situation where we didn't have that kind of policy.
Okay. Yes. Right over there. Here comes the mic.
Thank you. I'm Antonio Delece. I'm minister at the European Union delegation here in Washington. Two points, if I may. One concerning the IMFC versus G20, the other on EU institutions and Greece. On the first one, in the discussions concerning the reform of the IMF and in the G20, one of the, two main issues arose. One, for the reform. One was the even-handedness of the IMF. The other was the traction that IMF recommendations had, or the lack of traction that IMF recommendations had so far. In the first case, especially emerging countries considered that the advice and the activities of the IMF were not sufficiently even-handed, so that there were two standards, one for advanced countries and one for emerging and developing countries. And therefore, this led to the to the recommendation that there is a better governance within the IMF. The other issue that I mentioned is the one of traction. Very often the IMF made the right assessment, the right recommendations, but it stopped there. And one clear case was with global imbalances. The IMF convened all the main partners, the US, China, the Euro area, Saudi Arabia, and Japan, and they came to conclusions on the assessment and also recommendations, but they stopped there. So what was missing was this last step of turning these recommendations into actual policy measures. And the consequence or the conclusion was that there need to be something, some instance or some reform so as to enable that traction. And two possibilities were floated. One was the reinforcement of the IMFC, in fact. The other was the creation of some kind of council within the IMF with ministers playing this role. What is the actual outcome? It doesn't matter, but the point is that, just for improving the effectiveness of the fund, there is the need to really turn that into more a more functioning body. In the meantime, the G20 took partly this responsibility of turning the IMF assessment into action. So, but indeed, and I would agree with Fred, the G20 remit has become wider than the IMF. So I see scope for both. For reinforcement of the internal governance of the IMF with the IMFC or with the Council, and the maintenance of the G20 to deal with broader issues, of course, building on a stronger and much more effective IMF. So that's the first point. On the second point, just a clarification. You rightly mentioned that the EU had a fiscal framework with some rules. I would like to clarify that these rules have evolved. Of course, the Economic and Monetary Union in the EU is relatively new, relatively young, but this fiscal framework has evolved, and the two parameters, the 3% and the 60%, were enriched with much more content and much more deep monitoring and surveillance in 2005. And following the assessment of the 10 years of EMU that we celebrated in this forum, there were also a very thorough assessment of the pros and cons and the successes and failures of the Economic and Monetary Union. And one of the clear conclusions of that assessment were precisely that there were two areas where the business was unfinished. One was the internal convergence, so the internal imbalances and the competitiveness, the evolution of competitiveness within the euro area countries, and the other was the effectiveness of fiscal surveillance. So on those two areas, there was already action being implemented, so the deepened and the broader surveillance, taking into account also structural reforms. All that was initiated, and of course, with the crisis, all those problems became more apparent, and there has been more action in this respect. And as an example, the finance ministers meeting that followed the solemn support of the European Council, so heads of state and government, to Greece. One of the follow-up was that many of the instruments that were available to address certainly the fiscal deficit, but also structural reforms, were put in place so as to ensure that this surveillance, that these institutions that you mentioned are put in place so as to support the redress of the problems in Greece and more broadly in the euro area. Thank you.
Okay.
If I could, I'd like to make a comment on your first comment, because it goes to the governor's central thesis in his remarks. Many of us who supported the evolution of the G20 did so in large part because we felt it would significantly strengthen the IMF, because it would give a new leadership push to the role of the IMF. And I think if one looks at the evolution of the G20 over the last year and a half, it has done exactly that. When you read, you quoted from it, if you read that April communique of the G20, that was the main meeting, the one in London, most people who read that carefully came away concluding that the big winner from London was the IMF, because practically every paragraph gave the IMF new responsibilities. It also gave them huge new resources. That's when it was agreed to triple the resources of the IMF to make emergency lending. That's when the whole concept of special drawing rights was reinvigorated with a huge new allocation. So again, I can't obviously speak for everybody who was involved in promoting the G20 process, but many of us did so because we thought it could give a strong new political push from the highest level to enhance the role of the IMF and its capability to carry out its responsibilities. And I would submit, as I say, so far, that has been the case. So that's without trying to counter all of your case that the centrality of the IMF should go even further. But I believe that there has been a significant enhancement of its role so far through the IMF, through the G20 process. Now, you could say, well, okay, the next step for the G20 is now to vote itself out of business, having resolved the crisis, hopefully, and then turn it all over to an enhanced IMFC. That could be a logical next step. But at least so far, I think the two have actually proceeded in a parallel and mutually supportive way, rather than in any way the one denigrating the role of the other.
I wouldn't disagree with you, but I think it is important for IMF, for the institution, to bring their members along. So that was really my point.
Which is fair enough, yes. Yeah.
Thank you. Alice Tepper-Marlin from Social Accountability International. I wanted first to congratulate you on the holistic and long-term approach to investing that your social criteria, incorporating them, has reflected. And second, to ask you about your view about the relationship between your initiatives in this area and what's happening in the IFC, in some Brazilian banks, in some Dutch and German banks in the same direction, and how you think that might be filtered out throughout the banking system over the next several years.
I'm not quite sure if I'm able to give you a thorough answer to that, but I think it is there is a lot of initiatives. There is a lot of seminars going on, and there is a lot of papers that are written on these issues. I think what we feel is that it is important to work on the ground with some specific questions. And I also think it is important for individual investors not to broaden the kind of issues that they take up with the companies. I think it is important to concentrate on some issues, for example, children labor, and work on that kind of issue not for 1 year or 2 year or 3 year, but 5, 10, 15, 20 years. And I think that if one do that, you can see eventually results. And that is more important than seminars and declarations, I think. Yeah.
You mentioned, Mr. Governor, that Anders Åslund from the old colonial power is a strong ally on this issue. So, Anders.
Thank you. I would like to bring up the other Nordic issue, Iceland, and you have discussed moral issues now. How do you look upon it morally? The sustainability of the Dutch and British claims on IceSave versus Iceland. Should these really be acceptable? And if they should be acceptable, to what degree? You touched upon it earlier, and I would like to try to draw you out a bit more on that, if I may. Thank you.
I think it is of course a difficult issue, but I think it is important to take into account that Icelandic creditors to these banks have not lost a dime. The Icelandic depositors in this bank have not lost anything. What the Netherlands and the British did was to go in and pay money to the English and Dutch depositors in these banks. I think then they thought that they could get that back from Iceland. I think it is quite reasonable what they have, I must say, what they have done. And it is difficult to participate in global markets on a level playing field, and then when a crisis occurs, deal with your own citizens in a different way than other creditors. So I think that is an important part of that. I think we have a lot of Swedish banks in Norway, and if one of those banks went bankrupt, I don't think Norwegian authorities would have liked to have to pay Norwegian depositors for the guaranteed premium of such a loss, eventual loss. So that's my impression is that the numbers have been somewhat exaggerated. The numbers involved for the Icelandic economy. That is really, it is a huge number, of course. But on net basis, it is in the order of magnitude of 10 to 15% of GDP. Many people have talked about the gross number of some 50% of GDP. But if you look at it on a net basis, I think it is somewhere in 10 to 15% of GDP. Of course, a very big number, but nevertheless. By the way, due to the crisis, Iceland have now come down to the same level of income as Sweden and Britain.
Governor, we are very much in your debt for bringing such an array of thoughtful and well-considered views to our discussion today. It's great to get your perspective. It's great to get your ideas. We'll look forward to continuing to discuss them with you. Thanks to everybody for coming. Meeting adjourned.